I'm Ashton Addison from the Crypto Coin Show, and today on Blockchain interviews we have Jerry Fragiskatos, co-founder of Apex Fusion and CEO of HAL8, here to discuss the multi-chain future of blockchain, dApp development, and where we see the industry going, and so much more. Jerry, welcome to the show, and thanks for taking the time.
Great to be here, Ashton. Thanks for the invite.
Yeah, excited to dive more into multi-chain and blockchain interoperability. I truly believe, and I think everyone agrees, that chains need to work together, and not just liquidity, but full interoperability if we're going to grow the blockchain system and take over the financial system and however else it plans to take over the world. So excited to dive into your insights and what you and the team and all the developers have been building at Apex Fusion and HAL8. Let's just kick it off on a high level with a bit on the work you and the team have been working on over the past few years, and then we can dive into all the details.
Sure. I mean, ultimately, when blockchain is going to be universally adopted, people will not know what infrastructure they're using in the backend, kind of the way the internet works today. I mean, the way that we've bootstrapped our industry was very much through tribalism and, memes and culture and all this kind of stuff. But when, for example, the Clarity Act passed in the United States and big corporations are given a blueprint about how they can use crypto, they're just going to want to use the best, the fastest, the most usable platform that they can. So I come from the Web2 world. That was most of my career. I'm an engineer by training, and I've done mostly large-scale IT in the Web2 world. And we're entering that phase where we have a lot of different blockchains, but they don't really interoperate very well with each other. And during that phase, was the big movement of middleware that came out in Web 2. Your VMwares, your Oracles, and so forth that allow different systems to communicate with each other. So in the crypto space, there is an analog. So there are two kind of, let's call them large-scale technology stacks that the entire industry is built on. One is called UTxO-based, which is what Bitcoin was built on. And one is called account-based, which is what Ethereum is built on, and so forth. They each have their technological trade-offs. Largely speaking, the UTxO chains, which is to say Bitcoin, Cardano, Dogecoin, Litecoin, there's like a stack of those technologies built with UTxO. And largely speaking, they're a store of value. And UTxO is very, very good for high assurance, deterministic use cases. Okay, and $2 trillion of our industry is stored in that side of the tech stack, mostly in Bitcoin. And then you've got the rest of the world, which is an account-based system. And if you think to really simplify for the layperson, UTxO is analogous to cash, and account-based is analogous to bank account. And so on the account-based systems like Ethereum, Solana, and so forth, it's far more programmable, right? But it has less of the security characteristics of UTxO. So we said, okay, let's look at the last 10 years and more of technology buildup in our space, and let's build something to solve this problem. And what we came to is a tri-chain architecture, where each chain solves one part of the classic trilemma of the blockchain, and does it and very specifically tackles that particular problem. So we have 3 chains, and the big news as of today is that all 3 chains are on mainnet. So our entire platform is on mainnet. And so the big call to action is going to be for dApps to come on our chain and start developing on our chain. We launched Prime, our settlement layer, back in February. And that's a pure decentralization layer that issues the token called Apex, which we've branded AP3X to kind of distinguish it from the other Apex tokens in our ecosystem. And we launched that on some centralized exchanges at the beginning, and that was purely to bootstrap our network. So we have the decentralization layer, which is called Prime, and has no execution layer. So you could think of it as proof of stake Bitcoin, ultimately is what it is. And some of the characteristics it has the security characteristics of Bitcoin, but it also has some of the economics of proof of stake systems, and more specifically liquid staking. So it's natively liquid staking that we have on a Prime network. And we have 2 layer 2s or sidechains that we built on top of them, one called Vector and one called Nexus. Vector is the UTxO-based chain, but with smart contract execution capabilities, has fast finality. And so you can imagine this as a UTxO-based chain that has a more Solana or base-like experience. So you have the security characteristics that it inherits from Prime, but then has the speed because it has less validators and less decentralized. Then we have Nexus, our third chain, which is an EVM compatible chain. And just to give an idea of what technology they're built on, Prime and Vector are built on the Cardano stack, and Nexus is built with Polygon Edge, which are the stacks that have gone the farthest in terms of adoption and so forth in the enterprise and those use cases. So we have all three chains that are live, and we're inviting dApps to develop on them. But we don't live in a bubble. So part of the puzzle that we're trying to solve here is we've got $2 trillion of value on the UTxO side, $2 trillion of value on the EVM side or the account-based side, but there's very little flow of value and so forth between them. So our platform is a great spot to start. We're not tribal. We encourage people to go cross-chain. We encourage people to deploy in other chains. In fact, us ourselves are multi-chain, and I'll get into that in a minute. And so when you develop on Apex Fusion, there is no vendor lock-in. So you could use the UTxO stack and then ultimately expand to the communities that are UTxO-based, or use the EVM stack and then expand to communities that are EVM-based. And we're happy for a dApp to live on other chains, have their token on our chain, or vice versa. And the way that we've done this is through bridging. And so that allows for the cross flow of value between these two large technology stacks. And so we have two main bridging technologies. One is called Skyline. It's our provider that we partner with that attaches the UTxO side. And this is where we can get tokens like ADA, like Bitcoin, like Litecoin to come into our ecosystem. And then we've partnered with LayerZero, which is the industry leader in cross-chain, globally speaking, in our space. And that's where we bridge over to the rest of the world, and they're bridged with 150 chains. And we've already kind of drunk our own champagne, and we started with our own token, Apex. We're already in the Cardano ecosystem. We use Skyline to bridge our token to the Cardano ecosystem. It's called CAPEX, and it's already in all the DeFi protocols. So you can swap it, you can borrow, lend it, and so on and so forth. And we even have a staked asset that takes advantage of the liquid staking aspect of our chain, and it accumulates rewards within that token. It's available on Wi-Fi, the DEX that's on Cardano, and you can get a token that natively secures our chain, and you can get rewards on another chain. So you can secure our chain while existing on a different chain. And then the other big, and the announcement's coming out today, is we bridge with LayerZero to Base. Now, Base is just, in terms of the strategy and Coinbase backing and so forth, is just an excellent hub for liquidity. And so our token is listed on QuickSwap, and it's also listed on Aerodrome on Base. And we're working closely with Base to be kind of our liquidity hub, because we're just very bullish on their strategy, what they're doing, the access to 100 million using the Coinbase side, and so forth. And then we'll expand from there. So we've created a system where you could deploy your dApp on our system or another chain, and then we'll cross-chain. Either start your dApp on our system, put it in another chain, or have your dApps on other chains and bring a token to our chain, and then have a cross-chain liquidity superhighway, essentially. And we've also partnered with Stargate, which allows us to bring stablecoin liquidity. So we have USDC that can be bridged over into our ecosystem as well. As you know, the big move this year was the Genius Act. Stablecoins are one of the few things that have found real product market fit in our space. And it's really the oil of the engine. And so you need sufficient stablecoin liquidity to make things run. So what we've created a platform ready for the Clarity Act, ready for enterprise or anybody in the Web3 space to build on and not have the fear of vendor lock-in, right? The biggest problem now is I think projects must spend a lot of time choosing which chain to start with, and they don't know, right? We built all the plumbing where you could start with us and expand anywhere. And I think that's our superpower, ultimately. So there's there was an expression back in the day where I used to work in Web 2 that you never get fired for choosing IBM, right? This is very similar, is that you'll never get fired for choosing Apex Fusion because you can always expand to any other chain, and you will not have a hostile community once you do so. In fact, we've invested in the plumbing like LayerZero and Stargate to allow you to do that natively. So that's really the value proposition. And then one last thing, and I'll open the floor to other questions, is our Vector chain is our technological crown jewel. Vector being UTxO based and also Haskell based, which is a functional programming language, really targets high assurance cases. So Haskell in the traditional world is used for things like ATMs that uses functional programming, satellites, aerospace, and finance. So anything where there's zero tolerance to error, they use that programming paradigm. So vectors really are focused in terms of our target market for dApps ultimately.
Hmm.
And then Nexus is there for the interoperability. So that's really the way we constructed the entire platform. And it's
Wow.
making it today.
That's very exciting, Jerry. And yeah, there's a lot of moving parts that hopefully, when you get past the developer stage, as you mentioned at the beginning, people don't need to get mainstream adoption. They don't need to worry about the infrastructure. You've sort of laid it all out so that people can have a dApp. They can go put their funds in and not have to worry about, oh, I want to connect to this other dApp on this other programming language. We can just make it all interoperable behind the scenes. And you spoke there about the UTxO chains and how there's over $2 trillion of value in there, mainly in Bitcoin, which is of course important, but there's Cardano and Litecoin as well. And there's not as much programmability as there are in Ethereum and the account-based chains, but there's a lot of value there that could be unlocked if there was more programmability. How much of a focus is that on maybe Bitcoin specifically? Because institutional money and the trillions of dollars that could become tens of trillions soon, if they can find other ways to utilize that value in dApps or in other kinds of financial products. Can you hone in a little bit more on Apex Fusion's ability to bring functionality to the Bitcoin chain?
Sure. So in terms of liquidity, that's been, I would say, largely solved for Bitcoin. There's a lot of wrapped Bitcoin products in the account-based worlds that have significant TVL. Like I think wrapped Bitcoin is $20 billion or something like that in terms of TVL. So from a TVL liquidity standpoint, I think that problem has been largely solved. That hasn't been solved for the other UTXO-based chains like Cardano, Litecoin, Dogecoin. Zcash is also a UTXO-based chain. So that hasn't been solved there. That has very little liquidity on the EVM side. So our target in terms of liquidity bridging would be those other chains. For Bitcoin specifically, the vector chain uses the same technological stack. It's Nakamoto consensus, it's UTXO-based, and so forth. So any dApp technologically built as a layer 2 on Bitcoin can function on vector quite easily. So, and of course, we will also bridge Bitcoin over to our ecosystem, okay? That could be done from two directions because you could do it directly from Bitcoin with Skyline and have our own wrapped Bitcoin. But then there's also a large available choice of wrapped Bitcoin products on the EVM side. So think of wrapped BTC, think of CBBTC, which is the Coinbase version of BTC and so forth. So that can come very easily through LayerZero on the other side. So the liquidity side of Bitcoin has been solved. I think the technological part of it or the technology engagement has not been solved. There's a lot of projects working on that. There's a lot of layer 2s that are being built on Bitcoin, but they haven't done it in the way that we've done it and make it really natively interoperable with the EVM stack. And I think that's where our superpower comes in with the Bitcoin community. And we will get there. We started with Cardano as kind of our base, and we want to get that fully functional and fully working and fully tested and so forth. And then we can comfortably move to the Bitcoin world, and we can very easily go to the dApps that are being built on the layer 2s and invite them to build on Vector. And Vector, it does have an execution layer, it does have a smart contract layer, but it's also very, very fast.
Yeah, I saw the news about the Cardano link, which is cool, and I'd love to touch on that as well because I'm my realm is more in the Ethereum and the account-based ecosystem because the network effect has been there. And I know Cardano has a huge multi-$100 billion market cap, and there's some huge fans of it. But I think it's before Apex Fusion, it's a bit of a silo of like the Cardano fans are in there and they're trying to find a way to get out or to expand that into the account-based with something like Apex. But maybe you can touch on a little bit more on why Cardano was chosen as that first major integration and the development on there. What are the key pieces that are missing for them to succeed and for others to bring success into Cardano?
Sure. I mean, when we started, I was the chief commercial officer over at Cardano before I started Apex Fusion. And
Okay.
so we are solving a commercial problem. I think Cardano has phenomenal technology in terms of Nakamoto consensus, proof of stake, liquid staking, a UTXO-based system with smart contracts, the functional programming, all that stuff is gold. Where it's lacking is the commercial link. So it's lacking scalability, right? And they're working on various different initiatives to get that done. There's Hydra and Laos and a whole bunch of deep research projects that are working on that part of the puzzle. We're just solving it now, today, right? And we're doing it in a pragmatic way by having Vector as a fast finality. And we have one of the original architects of Cardano that worked on it, Duncan Coutts. And we have a paper that actually shows that it's fast finality. So what Cardano is missing is two very simple things. It's missing a fast finality, high throughput chain, which we're providing through Vector. It's missing interoperability, which we're providing with our bridging play. And it's missing stablecoin liquidity. And the reason why it's missing stablecoin liquidity is because Cardano is a very idealistic, I would say, future looking platform. And they're quite allergic to centralization. They're quite allergic to USDC and stablecoins and so forth because they feel it's a vector of more control, and they focus more on decentralization. And that, to their credit, this is what they've done, and they're creating more and more decentralized systems. Our vector chain takes a bit of a trade-off. Our prime chain is decentralized, and that's what we said. Decentralization is great for the backend, but it's not great for execution. So our vector chain has less validators and it's actually tweaked for performance. So we took Cardano and we made it more performant, and therefore it's a faster, cheaper, less decentralized chain, and that solves the scalability problem. And by doing that, we've solved the last puzzle of Cardano, because once you've done that, you've unlocked programmability, scalability, stablecoin liquidity, and so forth to the Cardano community. And this moves both ways. And so we're perfectly happy for Cardano dApps to stay on. Our token is there. You could buy CST APEX and secure our network through Cardano. And if you're a purist and you don't want to move from Cardano, you could stay in Cardano. If you want to try a new technology, you can get onto Vector. And we already have a pipeline of dApps that will deploy on Vector. And you can get a faster, cheaper experience with more liquidity, which is the part of the puzzle that's been missing from Cardano. Now they're solving it more long-term, more decentralized, and so forth. Once they've done that, we can also adopt that and bring it to our chain. And vice versa, we're going to have our own innovation track. And when we have breakthroughs on our side, you could transfer it to Cardano. At the end of the day, the end user, when we get to the billion users, right, or the multi-billion users, they're not going to care what infrastructure in the background. They just want it to work, ultimately. So my entire pitch was probably geared more towards builders, right, to understand the technology. But for an end user, when you have your cell phone or your smartphone, you have no idea what RAM stack you're using, whether it's Samsung or LG or what screen you have. You don't care. All you care is that it works. So we are completing the plumbing to allow Cardano to work properly, right? And the same could be said once we attach to Litecoin and to Dogecoin and to the other stack. Now, Bitcoin has a much more robust ecosystem of that, so that's a bit of a special case. But the rest of them kind of are in need for this type of thing. In fact, a lot of projects go cross-chain by themselves. They start on BNB, for example, and it's a great place for liquidity. Very crowded, it's red waters, as they say, from a marketing standpoint. And then they transfer their protocol to Cardano, get a native token there to get the community aspects of it, and they live on both chains. But that's expensive. Like every dApp needs to do that by themselves. We provide the infrastructure and the plumbing where you could do that out of the gate. So you don't have to worry about the multi-chain journey. The multi-chain journey is baked into the cake. And I think that's kind of a big value proposition that we have.
Yeah, no, I agree. And thanks for explaining that about the purists on Cardano, and then trying to balance that, functionality and speed and finality with the decentralization, because, as you say, for the end users, they don't, as long as it works, and especially for corporations and enterprises, the number one thing is that it works and it works well. And if, they don't care necessarily about decentralization if you're giving up functionality and value. And that's, I think, why Cardano has been fighting that uphill battle of let's try to keep these principles, but it's not working as well if we would have just done it more centralized and sort of not followed the thesis of blockchain.
Yeah, it closes off certain segments of the market just to keep it super simple, right? That's ultimately what it does. But it also doesn't live up to its whole potential, because the functional programming side of it, the UTxO, the determinism, the formal methods that they used are highly usable for high assurance use cases. And once
Mhm.
those start to come into fruition, the compliance officer, the security officer, they're going to look at the EVM stack and they're going to say this is not sufficiently secure. We want a functional programming
Mhm.
high assurance code base. And that Cardano has that to offer. But if you want to scale an enterprise, you need to have it as, high speed and low fees. In fact, Vector can also be copied and create as a private chain, right?
Mhm.
And you can use it as a
Mhm.
private chain. So an enterprise, their journey could start as a private version of Vector, use that for their higher assurance use cases, and then when they need a public connector, they can connect back to our ecosystem. So
Mhm.
by creating a multi-chain hub, you can also attach other chains in the future, like layer threes or layer, depending on how the nomenclature is going to end up. There's side chains or layer twos or layer threes. We're still early in the phase of defining what each one of these things mean. Like I said, ultimately the end user doesn't care. They just care that it
Mhm.
works, that it's secure, that it's fast, that it's cheap. That's what they care about, right? And that's what
Definitely. Definitely. And with that, security, especially when you're moving financial assets, whether it's a small amount or more importantly, a big amount, if you're moving them between chains, in the past, with the traditional bridging, it wasn't 100% secure. At least sometimes somewhere something goes wrong and people lose assets or hackers come and make it so that somebody lost their assets through theft or through some issue with the code. And I'm sure as the compliance officer before, you're well aware of making sure that it's compliant and secure as sort of the utmost importance. Can you talk about the Skyline Bridge and sort of the interoperability between chains and how to make sure nothing goes wrong and it works perfect?
sure. So Skyline, again, is a partner of ours called Ethernal. They're quite large in the EVM world. They're a group of solid PhDs that have been in this business for a long time, that have security top of mind. They even have a technology called Blade, which is a enterprise version of an EVM blockchain and so forth. So they're the top of the tier. And we spent more time on Skyline than we did on our other chains. And it has decentralization, and it's got multiple layers of security and so forth to make sure that these things don't happen. Also, we're going to start slow and move slowly with the bridge. In other words, there's limits to how much you can bridge at this period of time. And over time, as it's battle tested in the real world, and we make sure that it's 100% solid, then we can expand that, right?
Mm-hmm.
So being very methodical, we know that bridging is a vector, and we spent specifically a lot of time on it. And it's a decentralized bridge with all the characteristics that you would need to solve the big bridging issues and attack vectors. On the EVM side, LayerZero is the space leader
Mm-hmm.
in this type of thing, and they have quite a unique technology that uses messaging between smart contracts and not actual transfer of value, which is quite
Mm-hmm.
interesting. So they've solved it in another way, and we've benefited also from that architecture and that paradigm. So we spent quite a lot of time on the bridging side of it, and to make sure this is that as secure as possible.
Mm-hmm. Oh, that's really good to know. And of course, it's I'm sure it'll be monitored. And then when you unleash the limits and bigger players get in, it'll be more battle tested. With the development, you've put a focus on, okay, the development is live for developers to start building dApps and make it cross-chain interoperable. What do you think is part of the key to getting more Web2 developers like yourself, at least aware or having the thought of, hey, I should really start moving into Web3 like you did?
So for me, having been immersed in Web 2, I saw a lot of the issues that Web 2 has, right?
Mm-hmm.
So the data protection side of things. In other words, you get the
Mm-hmm.
platform for free, but the company like Facebook accumulates all of the value for the data,
Mm-hmm.
right? So centralization is a big part of it, right? The self-sovereign part of it, in the sense that not your keys, not your coins, right?
Mm-hmm.
Where you can actually be a self-sovereign actor, and you can actually have something to yourself. So when you have your money in a bank, for example, it's not your money. When you have your money in a blockchain, it is your money because you have the
Mm-hmm.
keys, you can access it. So
Mm-hmm.
those are the two big, I think, paradigm shifts that happen with blockchain. It's really solving a lot of the issues that Web 2 had. Also, there is no native transfer of value on the internet until Bitcoin came around. And
Mm-hmm.
now we're seeing, AI agents and so forth using the X402, I think it's called, payment
Mm-hmm.
rails. That's
Yep.
never going to happen on fiat rails. That has to happen on blockchain rails.
Mm-hmm.
It could be Bitcoin, it could be stable coins, but it has to happen on blockchain rails. So it also solves the whole AI agent economy problem. And then the last part of it is authentication, right? So uh, in the world now of deep fakes and AI and so forth, it's very difficult to know what's real
Mm-hmm.
and what's not.
Mm-hmm.
And the ultimate use case, I think, for blockchain is going to be authentication. So you can
Mm-hmm.
imagine right now we're on a Zoom call. You don't really know if I'm a human or not. I could be an AI deep fake video, right?
Mm-hmm.
And they're getting so good that you can't really tell
Mm-hmm.
anymore.
Mm-hmm.
The only way to really solve that problem is through cryptography, right? Is to
Mm-hmm.
have a cryptographic wallet, which blockchain has solved, and you'd probably log in with your cryptographic wallet, and with a proof, call it proof of human. I think that's another huge use case.
Mm-hmm.
So blockchain's brightest days are ahead of it. The biggest hurdle has been regulatory clarity,
Mm-hmm.
and mostly in the United States. I think, jurisdictions like Singapore, the UAE, and now even Europe with Mika have largely solved the regulatory overhang, but the U.S. has not. We have a
Mm-hmm.
lot of hope with the Clarity Act that once that gets passed, it's going to provide that clarity. But we're not there yet. We're at that phase where I think once that passes, you're going to have a flood of companies trying to figure out how to use a blockchain, and they're
Mm-hmm.
not going to have any idea where to start, right? They're not going to know. They're either going to go to Ethereum because it has a big brand name, right?
Mm-hmm.
Or go to Solana because it's got a big brand name, but then they get stuck in that ecosystem. They don't know how to get out. We're kind of building the plumbing where it's vendor agnostic. I
Mm-hmm.
mean, I used to work for Dell, so this is kind of like VMware, right?
Mm-hmm.
So VMware goes on any OS. You can use any OS ultimately, so it doesn't lock you in. This is kind of very similar. So that's going to be
Yep.
our pitch to enterprise is that you could start with us and go anywhere, so you don't get vendor lock-in. And also the team that we've put together um, largely comes from traditional business and traditional finance and traditional IT, right?
Mm-hmm.
We do have some Web3 people, but we're largely Web2 veterans that got into Web3. And
Mm-hmm.
so we know how to speak the language of enterprise. We know how to, to talk to them, how to, do the business development with them and so forth. So that's going to be a big part of our roadmap moving forward.
That's really exciting, Jerry. And you're right on that two parts about AI agents and robots, as well as AI content. It's getting a little ridiculous right now. We definitely need some blockchain with the AI content on YouTube and Instagram. You can't tell. There is not enough clarity on, there's a new song that comes out and everyone's like, this is amazing. And it's really not clearly written that it's AI. It's sort of like a little disclaimer in the corner. You
Right.
wouldn't even be able to tell. And same on X and all the other social media platforms. Once you watch one AI video, the algorithm shows you all AI and there's no disclaimer saying, this actually isn't real.
Right. Whereas if you're using a cryptographic wallet, if you're if you're if the content doesn't come from that vector, then you have to not trust it, right?
Mm-hmm.
As a default, you'd only trust kind of the ones from verified sources, right? Which would be through a cryptographic wallet. You could also imagine that, let's say you have a smartphone taking a video, it'll take some metadata from that location and so forth and confirm
Mm-hmm.
that it's actually been
Mm-hmm.
taken from a live camera without modification, right? And then
Yeah.
that hash would assure that if it's modified, you know immediately that's been modified, right? And so I think this is a big frontier that hasn't been explored yet. There's two big ones that I think will be more imminent. One is capital formation. So we saw recently with Coinbase acquiring Echo and their push with Monad and the recent launch with Monad, that they're seeing into the future already, and they know that startups in the future will not be raising capital traditionally through IPOs. They'll be using the blockchain.
Mm-hmm.
That's a no-brainer use case as far as I'm concerned. It
Mm-hmm.
offers so much more flexibility. It's much less expensive and so forth to do. You can imagine a startup comes up and launches a token that represents a product line, not even a company. And so capital formation, I think, is a massive part of it. And then RWAs, real world assets, I think is
Mm-hmm.
gonna be another obvious market for blockchain moving forward, more imminently, closer into the future once the Clarity Act passes.
Yeah. No, I agree, and I'm looking forward to it. The future is bright. I'm looking forward to 2026 and the development of more dApps in the ecosystem and all of the chains working together as well. You got to work together at this size. And yeah, exactly. And I appreciate what Apex Fusion is doing in making that ecosystem to make the development easy and interoperable for people that want to learn more about the technology, because it's very exciting, but there are definitely a few moving pieces to it. What's the best way to follow along with the development and for developers to test out, getting started on it?
So our X channel is a great place to start because it has all the links, or you can go to our website, www.apexfusion.org. We have a Swiss foundation, so our token has actually been certified as being a utility token, so we've got FINMA compliance. And then the labs is based out of Abu Dhabi. I'm the CEO of that labs. And we have a US entity that's waiting for Clarity in the US to open up. And so we have, multi-jurisdictional coverage, I would say. So start with the website. That's where you get all the information, or our X channel. Start there, and then come on a journey with Apex Fusion.
Definitely. I'll leave the link in the show notes to all of that and the socials and the platform. Appreciate your insights into multi-chain, everything from AI content, agents, development, UTxO ecosystems versus account-based. There's so much to keep up on as all of these different chains are all growing together. Make sure let's keep them interoperable. And I would love to follow up again in the near future, Jerry.
Fantastic. Thank you for your time, Ashton.